He said our work is not even close to being done or whatever. Like, this is all year. But the volatility of rates is not going to be what the volatility of rates was last year. And that's the problem for the markets, is the uncertainty, the jarring, very quick moves in both directions, the rapid change in rhetoric from one speech to the next. That's what stocks have a problem with. Stocks don't necessarily have a problem with a 4 or a 5% rate and how long it takes to get there, et cetera. We can kind of handle that. And all the evidence you need is how we reacted to the jobs report. Let's look at the one-year Treasury, up 23 basis points since February 1st. Very manageable, well within the range of where it has been. The two-year went from 4.1 to 4.44%. That happened in 2 days. It's a 34 basis point move. Fairly notable, but again, contained within that expected range. The dollar back up 2%. It was down 3%. The low of the year was February 1st. Very quickly took back 2 of those percentage points. Again, within the expected range. You have a VIX that's normalizing back at 20. It hit 17.5, which obviously is abnormally low for the last year or two from what we've seen. And then just let's finish up with earnings. This is important. 50% of S&P 500 companies have reported. If you take the decline and extrapolate that out for the rest of the index, which I think is reasonable, that's negative 5.3% year-over-year earnings growth, about in line with what was expected. The first time we've had a negative year-over-year quarter, you have to go back to Q3 of 2020. So it's been a while, but again, well telegraphed. So I think that's kind of where we are. We're going to see rates pop up a little bit. We're going to see the VIX pop up a little bit. We'll see the dollar regain a little bit of strength. And then we'll look at stocks and see if they still have their bearings. We don't need another 10% rally in the S&P. What we really need, Judge, is a little bit of stability now that we're coming through earnings season.
So are we going to find that stability?
We have.
Jenny?
We have.
Well, you know, that's funny.
Well, let's
so far.
Let's discuss whether we think we can maintain it.
Okay, good point.
Because I think that's what happens today. Does today destabilize what Josh was talking about, or does it just give us reason to continue where we are?
I think we've actually been, and this is going to be controversial, but I think we've actually been very stable. You know for how long? Since last June. Because what I said for over and over last year was, I bet if from June we span out 12 months, 18 months, we're going to be ultimately range bound. If you look back at this market, since it bottomed in June of 2022, it's been a pretty tight range. And if we take all this...
If this is stability, give me a boat in 8-foot seas.
No.
Because that's going to be more stable than this.
But Jenny's point is relative to where the market was, right? You had incredible volatility within the bond market. You don't have that.
25 basis point swings in the 2-year is stable.
But let me zoom out on this.
More stable than what had happened before.
Okay, I'd rather be on the sea.
So Josh said something, which was the Fed's work isn't even close to done. Guess what? The Fed's work is never done. It'll never be done. They're always going to be working hard. He also said the stocks have a problem with what the Fed's doing. They do and they don't. Where are we? We were down 18% last year. We're up 7% this year. So in the past 13 months in a week, market's down 12%. That follows a year that was up 30% in 2021, up 18% in 2022. If you zoom out, I'm going to say the stock market's shockingly stable. To only be down 12%, and I know you're thinking about bonds, Steve, right? And those are more volatile. But I'm going to say, too, if you bought a bond 3 years ago and you locked in a 1.5% yield to maturity and it was maturing in 3 years, guess what you got? You got your 1.5%. So it depends on the perspective that you're looking at.
I think honestly, the more important perspective is not how much we're only down. It is, Steve Weiss, the fact that we're 18% off of the low. And that is the perspective, I think, that matters more, because now we have to decide whether, A, that's valid, whether we think we're going to, reverse some of that, or we can keep building, as some are calling the low in October, the low, and that we've started a new bull market.